Welcome back to Curious Commerce, the topic cash flow statement, part 11. In this session, we will discuss about the limitations of cash flow statement, the role of cash flow statement.
A cash flow statement is very useful to understand the cash movement in a business. However, like every financial statement, has certain limitations. Learners must understand that cash flow statement alone cannot show the complete financial position of a company. Let us discuss the main limitations. It ignores non-cash transactions. The biggest limitation is that the cash flow statement records only cash transactions. Many important businesses transactions do not involve immediate cash movements. For example, purchase of machinery by issuing shares, conversion of debt into equity, depreciation on assets, asset acquired through credit. So identify these transactions affect the business position but do not appear in the cash flow statement because no cash moves at that moment. So the statement does not show the full picture of the firm related to the financial aspects. Second one is not a substitute for income statement. Cash flow statement does not replace the profit and loss account. Why? What is the reason? Because profit and cash are different. A business may show high cash inflow but still incur losses. A business may show profit but face cash outages. Majorly, income statement shows the profitability, income earned, and expense incurred. But the cash flow statement shows cash movements only. So both statements are required to understand the business performance. The third major limitation is past oriented statement. Cash flow statement shows only past cash movements. It tells what happened last year, how cash moved in the past, but it does not directly predict the future cash flows. Management must still prepare cash budgets and forecast for future planning. So it is a historical information, not future guidance. Cash flow statement is usually for identify the liquidity or the liquidity analysis and the cash management and the inventory decisions. But it cannot alone choose the profitability, long-term financial health, and business efficiency. For complete analysis, we need income statements, balance sheet, and cash flow statement together. Cash flow statement shows cash movement but ignores non-cash items. It cannot replace income statement. It shows only the past data. Cash flow statement shows cash reality, but financial health needs all financial statements together.
A cash flow statement is one of the most important financial tools for business management because every business runs on cash. Even profitable companies can fail if they do not manage cash properly. Let us understand the important role of a cash flow statement in a business decisions. The first one is the cash planning. Cash flow statement helps the businesses plan for future cash needs. Management can see how much cash is generated from operations, where cash is spent, whether cash is sufficient for daily expenses. Using past cash flow data, business plan related to salary payments, suppliers payment, operating expenses, working capital needs. This prevents sudden cash shortages. The second major rule is the loan repayment planning. Businesses often takes loans for expansion or operations. Loan repayment require regular cash payments. Cash flow statement helps management to check whether enough cash is available, the ability to pay loans on time, need for refinancing or restructuring loans. Proper cash planning prevents default and maintains good credit reputations. The third role is investment decisions. Before purchasing machinery, building, or investment, companies check cash availability. Cash flow statement shows whether business generates surplus cash, ability to invest without disturbing operations, and need for external funding. Companies invest wisely when cash flow is strong. The fourth role is the crisis management. During the difficult situations such as economic slowdown, sales decline, payment delays, pandemic situations, cash becomes most important survival factor. Cash flow statement helps the businesses to control expenses, delay investments, arrange emergency funding, and for maintaining essential operations. Companies with strong cash management survive crisis better. Cash flow statement helps in for planning daily cash needs, for the managing loan repayments, for making investment decisions, for handling business crisis. Profit keeps business growing, but cash keeps business running. Without cash, even profitable companies may collapse. Profit creates success, but cash flow ensures survival of business. Let us conclude our discussions on cash flow statement, an essential financial statement for every business. A business may show good sales and profits in accounts, but if cash is not available at the right time, the business may struggle to pay salaries, suppliers, and the expenses. This is why the cash flow statement is extremely important. It clearly shows how cash enters the business, where cash is used, and whether enough cash is available to run operations smoothly. Many businesses fail not because they lack profit, but because they run out of cash. Proper cash flow management helps business avoid such situations. The biggest lesson for every business owners and students or the learners is profit shows business performance, but cash shows business survival. So always remember business survive on cash, not just profit. This understanding helps managers make better decisions and ensures long term business success. Thank you for watching. Please like, share, and subscribe to Curious Commerce. Follow our WhatsApp channel, Curious Commerce Financial Management Hub, for daily finance learning. Thank you all.